11th problem. The following is the balance sheet of Mysore Sandal Limited as on 31st March 2015. Liabilities amount, assets amount. Coming to adjustment, the following scheme of reconstruction was adopted. Coming to first point, fixed asset are to be written down by 33 1 by 3 percentage. Coming to next point, current asset are to be revalued at rupee 27 lakh. Preference shareholders decided to forego their right to arrears of dividend which are in arrears for 3 years. Next point, the taxation liability is settled at rupee 4 lakh. One of the creditors of the company to whom the company owes rupee 25 lakh decided to forego 50% of his claim. He is allotted 1 lakh equity share of rupee 5 each in part satisfaction of the balance of his claim. Next point, the rate of interest on debenture is increased to 11%. The debenture holders surrender their existing debentures of rupee 100 each and exchange the same for fresh debenture of rupee 75 each. All existing equity shares are reduced to rupee 5 each. All preference shares are reduced to rupee 75 each. Pass journal entries and show the balance sheet of the company after giving effect to the above. Coming to solution, in the books of Mysore Sandal Limited, journal entries, 4 columns, serial number, particulars, debit rupees, credit rupees, equity share capital account debit 7 lakh. This amount you have taken from the balance sheet. Coming to two new equity share capital account, 70,000 share into 5 in credit side 3,50,000. 7 lakh minus 3,50,000. The balancing figure is 3,50,000. You will be writing as to capital reduction account, being reduction of equity share of rupee 10 each into shares of rupee 5 each. Next entry, old 13% cumulative preference share capital account debit 1 lakh. You have taken this amount from the balance sheet. To new 13% cumulative preference share capital account, 1000 preference share into 75 each, 75,000. 1 lakh minus 75,000, the balancing figure is 25,000. You will be mentioning two capital reduction account in the credit side. Note, being the reduction of preference share of rupee 100 each to rupee 75 each. Next entry, sundry creditors account, you can mention as current liabilities debit. Coming to next, two equity share capital account, 1 lakh share into rupee 5 each. In the credit side you are mentioning 5 lakh. Coming to next, capital reduction account, they have mentioned 25 lakh. In that 50% has been capital reduction. So 25 lakh into 50 divided by 100, you will be getting 12 lakh 50,000. 5 lakh plus 12 lakh 50,000, you will be getting 17 lakh 50,000. You will be mentioning that in the debit side as sundry creditors account, in bracket current liabilities debit. Note, being the claim foregone by a creditors and the allotment shares in part of satisfaction of the balance of his claim. Next entry, 8% debenture account debit 3 lakh. To 11% debenture account, 3,000 debenture into rupee 75 each. In the credit side, 2,25,000. 3 lakh minus 2,25,000, balancing figure is 75,000. You will be mentioning in the credit side to capital reduction account, being the conversion of 8% debenture of rupee 100 each to 11% debenture of rupee 75 each. Next entry, capital reduction account, debit 17 lakh, to profit and loss account 3 lakh, to fixed asset account 15 lakh into 33 1 by 3 percentage, you will be getting 5 lakh. To current asset account in the balance sheet 35 lakh minus revalued 27 lakh, so it is valued amount. You will be getting the reduction of 8 lakh. To provision for taxation account 4 lakh minus 3 lakh, 3 lakh in the balance sheet. In the adjustment you have got 4 lakh, so 1 lakh you will be mentioning in the credit side. 3 lakh, 5 lakh, 8 lakh, 1 lakh you are mentioning in the credit side. Being the loss return of assets reduced and provision for taxes increased. Balance sheet of Mysore Sandal Limited and reduced as on 31st March 2015. Three columns: A, equity and liabilities, note amount, shareholders fund, share capital, 13% cumulative preference share of rupees 75 each, 75,000. Equity share capital 8 lakh 50,000. Reserves and surpluses, non-current liabilities, secured loans, 11% debentures, 2,25,000. Unsecured loans, current liabilities, current liabilities 39 lakh minus 17 lakh 50,000. In outer column you are writing 21 lakh 50,000. Provision for taxes 4 lakh. In the adjustment you have taken total 37 lakh. Coming to next, B, assets, non-current assets, fixed asset 15 lakh minus 5 lakh, it is reduced. In the amount column, outer column 10 lakh. Current assets 35 lakh minus reduced amount 8 lakh. In the outer column amount 27 lakh. Total, if you are mentioning the asset side, it is 37 lakh. In liability side as well as asset side, it should be 37 lakh. Check out the balance sheet once again.